Good morning, everyone. I'm Debbie Scarborough with AMBA. It's Insurance Chat with Debbie because insurance doesn't matter until it does. I'm so glad you're joining us today. I have been in the insurance industry for 22 years. Um, I have been with AMBA for the last 6 years. I will have to say I love this part of insurance the best. Most of us are familiar with medical insurance because we have to have it. We have to have home and auto insurance, but there's a lot of supplemental type policies. Just like myself, for many years, I just sort of ignored because I didn't really know anything about them. Um, did you know that Medicare, in your Medicare handbook, they recommend long term care? Life insurance is so important. So many people don't have life insurance in play. They think I've got plenty of time to put that together. And MASSA, our ground, air, and ambulance plan. I'll be honest, the first 2 years I was with AMBA, I probably still didn't understand the need for that policy. But I meet people every day that are very thankful that they had a ground, air, and ambulance plan in place. So don't hesitate to call me, text me, email with questions about insurance, and if you're ready to put one of these policies together. I am a licensed insurance agent in Georgia, Florida, Alabama, and Tennessee. The good news is AMBA is licensed in every state. So if you're in a state that I'm personally not licensed yet, that just takes a couple days to get licensed with that state. The good news is I don't need a license to sell you a MASSA plan. So if you're in Michigan, California, Texas, Pennsylvania, you can purchase a MASSA plan and it be effective the very moment you call me. We put that in effect, and rates are low in $24.17 a month in Florida, $27 a month in every other state. It's a great plan to start for your family. Can cover you and a spouse. What about children? If your children are living at home and under the age of 26, they can be included for that $35 a month to be included in your plan. I put one in effect for my husband and I several years ago. I also have one on my two sons because now they're out and about. They're 24 and 26, so they don't live at home anymore. So they each have their own plan. I choose to pay for it because I know at 24 and 26, they may not see the importance of this plan, but mama sees it, so I pay for it. We do have dental plans, vision insurance. Our dental insurance is with Emeritus. Our vision is with VSP. We have cancer insurance. October, Cancer Awareness Month. So if you have looked at a cancer plan, that's awesome. But if you haven't put one in place, let's chat about why you haven't put a cancer plan in place. A heart and stroke policy. A lot of people put a cancer plan in place for a lot of different reasons. They kind of forgot about a heart and stroke plan. We have a great heart and stroke plan with Cigna and Mutual of Omaha. Which plan is best for you depends on your needs, depends on your medical history. Diabetics, we know that your chances of a heart attack or stroke have increased. So Cigna will take you even if you're diabetic, as long as you're not on insulin. So if you're on insulin and you still want a heart and stroke policy, let's look at Mutual of Omaha. Mutual of Omaha will accept diabetics on insulin as long as your A1C is 7.0 or less. So talk to an insurance representative, maybe someone that you know, or chat with me. My cell phone number, you're welcome to text questions. You're welcome to text for advice. Even if I don't sell you my product, I will gladly help you look at your plan. Good morning, everyone. Good morning. Good morning. I have a special guest today. Bartee has some life insurance questions. I know September was Life Insurance Awareness if you didn't know. So we're just continuing with our special guests that talk about some life insurance questions. How are you, Mr. Bartee?
I'm doing great today, and thank God for doing great. How are you?
Good. Can't complain.
Okay.
Or should I say that would be a different show?
Yeah. Yeah.
So
Uh,
insurance is always fun to talk about, but I know also too we get stuff in the mail all the time, and what's good, what's not, what should we look for. So I understand you've got some mail.
yeah. Well, the mail is not mine, but I had several of these type of forms that come through the mail from credit unions.
Hmm.
My wife happened to have one. Matter of fact, AAA they give you the same. Everybody's given $1,000 uh, worth of free coverage. So they
Right.
say. Now I want to find out: is that actually free?
I think so. I think from a lot of your banks, credit unions will send those forms. There's always a catch.
Yeah.
The catch is they hope that you'll take that $1,000 and then purchase more. So I know a lot of people that will purchase, just take the free $1,000 here or there. The the problem you got to keep up with when it's free is most of the time, how do we know we have life insurance? If we don't have it specifically spelled out for our family or the people that are going to take care of our estate, um, then they don't know where to find it. So if it's free, then you can't look through your checking account. Oh, I see he's been paying Mutual of Omaha or State Farm or somebody this. Oh, let me call them and see what insurance they have. So, hey, if it's free, take advantage of it, but make sure when that policy comes in the mail that you're putting it with those important paperwork, because a lot of companies offer that free life insurance while you're a customer of theirs. So I would check the fine print too to make sure that, that policy is only there as you're a customer. So what happens if for some reason you leave the credit union? Will it stay there? So you'll see a lot of that when the policy comes in the mail. Um, Looking at the insurance company paper that it's on, and just making sure you've stuck it together with those paperwork. And of course, they're counting on you chiming in and buying another 5 or 10,000 so they can get some money.
Yeah. I'm reading this policy, and it says current coverage $1,000. Premiums paid by the credit union,
Hmm.
but now it has coverage amount $100,000. Members only $10. Family plan $15. Uh, can you tell me anything as far as what your insurance coverage would be for $1,000?
Yes. So
I mean, I'm sorry, $100,000.
yes, I would be careful when you look at big amounts like that. 100,000, probably down there on the fine print is a term. So 100,000 is good for 10 years, 20 years, or 30, depending on your age, is how much you can buy. So when I see that, that flags to me that if you bought $100,000 worth of coverage for whatever the amount was, it is probably a term life insurance, meaning it's going to end at some point, and kind of not really end, but that $10 or that $20 is going to end after 2 years, and you'll be able to continue it at a very high price. And most people don't, because we buy term insurance when we're younger to cover a mortgage, to cover family, those things. But so I would say that that policy right there is 9 times out of 10 a term policy for 100,000. That $1,000 free is probably there as long as you're a member of that credit union, or I would want to read the fine print. And it's usually that fine print that we have to get the bifocals out or the magnifying glass to see for it. So they're trying to offer a good thing, but it's usually term.
Okay, now what if a lot of people, now I know a lot of people get these in the mail. There's a lot
Yes.
of people loan for me, I tear them up.
I do the same thing. They go straight in the trash just because I don't want $10,000 policies all over the place, or I don't want 3 or 4 life insurance policies. Now, I do sit down with people who say, oh, well, I've got this policy, and we kind of add them up to see, how much they have and is that enough. And, they'll say, oh, I have this $2,000 policy with so and so, I don't pay anything on it. So I'm not discouraging you from doing it. Hey, take advantage of the free part, but just make sure, be wary of how much more you purchase. Because also, too, when you purchase more, there may be some fine print that says there's no health questions. Well, okay, when there's no health questions or no nurse visit, that brings up the question of a graded policy, meaning it's really life insurance with a 2-year waiting period. If it's an auto accident, it would pay out immediately. But if it's not and it's health related, it's going to return your premium to your beneficiary and not pay out the death benefit amount. Is that still a good policy? Sure, it's still a great policy if you're one of those people who couldn't get life insurance another way, meaning you're healthy and you're paying more for it. So a lot of times when they send out those general things, everyone qualifies, no health questions. They're trying to get the healthy people to come in to kind of counteract with the unhealthy that come in. So that's the other thing. If you find yourself not being able to get coverage at all, then I'd say go for it, especially if the premium fits your budget. But just be wary that you know what you purchased. You know that you purchased $100,000. Sounds great, but it's only for 10 years. Or just take advantage of the free. Something is always better than nothing. And if you can get a couple of those policies together, they do add up to be something.
So you're saying with term life, there is a term. And,
correct.
So if you're able to get one that, say, what is the normal term for term life?
They vary. A lot of the term policies start as low as 50,000 up to 2, 3, 5 million. So a lot of times it depends on where you're at in your life. When we're younger, we're recently married and we're raising a family, traditionally the husband would have his salary times 3. There were different formulas that they used to decide how much insurance you need. Then a lot of times a growing family may list their mortgage, what it would think to get 2 kids through college, those things. Then when it was become to see how much the spouse would need, if a spouse wasn't working, well, you're still having to replace that spouse with daycare and those needs that would need to cover a growing family. So when we maybe retired and maybe the mortgage is almost paid off, I get a lot of people that bought just a $50,000 term insurance for 10 years because he knew he only had about 10 more years left on the mortgage. Or it could be, I've come across a couple people who maybe couldn't get insurance the other way or couldn't necessarily afford a whole life policy, because a whole life policy locks in the rate. It never changes. So when you buy a whole life policy, usually start looking at that at age 50 and up. You lock in that rate, you choose an amount, and the premium never changes. It builds some cash value, and that cash value is there if you ever want to take from it. Now we have a universal life insurance policy that's very popular, especially for those that are younger can get that. And it's a universal policy. The best way I like to explain it is if you've heard someone say, "Hey, that life insurance paid 10,000 plus interest." Well, that's basically what a universal policy is. There's a lot of things going on behind the scenes, but basically what they're doing is they're taking half of your premium going towards your death benefit. The other half is actually being invested, so it's growing, and is why there is sometimes after 10 years, 15 years, 20 years, there's actually some cash value built up that you can take a loan out against, or that you can just take out, and you still have your death benefit there, but you've able to take some of that cash there. A whole life policy builds cash value, but if you take 5,000 from that whole life policy, it decreases your death benefit, and you take it out knowing that you're going to either pay it back or you're okay with your death benefit not being that high. So there's lots of things to kind of consider when taking out a life insurance policy. So some people that'll get those $1,000 things from their credit union or otherwise, they'll just take them just because, hey, it's free, let's take it. But most people will do, if they don't have life insurance, is kind of take out a little more, and that's what they're counting on.
Okay, let's talk about two things. First, you were saying about the old days, they take half of the man's 3 times his check.
Yes.
Why it has to be the man?
Well, because years ago you were the breadwinner and the wife stayed home and raised the family. Of course, that's kind of not true now. Okay. Now both are working. So now when someone 20 something or 30 something are sitting down to talk about life insurance, sometimes it could be equal, or sometimes it's the female that is making more money. So she may need more life insurance than the man. But a lot of times it just depends on your situation and what you want to leave for the other. Sometimes, some spouses, one might have a better retirement plan than the other. So there's lots of little things to consider when you're deciding on life insurance at 20 and 30 now.
Okay, you talking about back then in the 1800s then. I understand. But now, the second thing with this whole life, you say, okay, say I take $5,000 out if I had a policy. Now, would I have to pay income tax on that money?
No. So that money, once you pay into that policy, and that is your money. So if you take it out, you don't. And that's the beauty of even the universal life, is you don't pay taxes on that money when it comes out. So that's kind of that nice thing, is why people like the universal life insurance, is it still has its death benefit, but then there's some cash value there that they take out. Maybe they take out to repair the roof or put windows in the house.
That sounds good for retirement people. Put their money in insurance like that, then you don't have to pay tax. Would it work like that?
Yes, the universal policy, for my son, for instance, he's 27. You can use that universal life insurance policy as income later. You still have your death benefit, but in 20 or 30 years, that policy would work sort of like an annuity, where it's paying out $500 a month, $1,200 a month to you as income that you're not paying taxes on.
That sounds good to me. I should have talked to you earlier.
Yes.
But now that I know, I appreciate it.
You're very welcome. Don't hesitate to ask questions and find somebody you trust, maybe not somebody who just sells life insurance, because what I found sometimes is you'll talk to some people and all they offer is term insurance. Well, that's all they're going to talk to you about. And I can probably convince you that a term policy is better. Just like I could only sell whole life, I'm going to convince you that whole life is better. So kind of talk to someone that's going to talk to you about all of them to find out what that need is. Because right now, our universal plan, I've been selling it a little more because it is less expensive than our whole life product, and you're able to get more insurance. Our universal starts at 25,000 up to 300,000. Is easy. Our whole life product you could get as low as 2,000, only up to 40,000.
Okay, but you know what they say, you get what you pay for.
Yes, and sometimes you got to just get something because something's better than nothing. I mean,
Yeah, yeah.
I know a lot of us think. I have people who say, "Well, I have money in the bank to pay for my funeral." Well, that's great, and I
That's me.
commend you, and I commend you for doing that. But make sure you designate that's what that's for. And a good way that you could do that right now is to go into your funeral home and prepaying for your funeral. Well, kind of what they're doing is buying an insurance policy with your money. So today, an average funeral cost is $9,000. You can buy a funeral, and in 10 years, 20 years, that same $9,000 you spent is going to go into an insurance policy and grow, so to be able to pay for your funeral. That way, all of your money, we don't know what our last day is. We don't know what our last year is going to be like. We may drain our savings account for long term care. We may drain it for hospital stays and care. So we've done such a good job on saving some money to pay for that funeral, but then we've drained it for other reasons. So I would encourage to go talk to several. If you have a preferable funeral home you like, go talk to them, and see what options they have. Hey, I have $10,000. I would like to go prepay for my funeral. And you'd probably be surprised at some of the advantages of doing that. You can even buy your headstones and buy some of those. So,
Yeah. Now, what if they go out of business? That's my only concern with all that. You prepaying, and everybody talking about yes, and what the gimmick is for the rest of your life.
yes. Well, the good news about the funeral homes that you do that with, you're actually buying an insurance product from Mutual of Omaha, Philadelphia Life, whoever. So you're really not purchasing your funeral from that funeral home. They're taking your money and buying a policy with a life insurance company. So there's zero chance, I won't say zero chance, but there's little chance that your insurance company is going to go out of business. Yes, your funeral home will, and that's okay. You get a policy in the mail just like you would if you bought a life insurance policy. So if that funeral home is out of business, you're contacting that insurance company that sold that product through them.
Okay, now I got a question for you.
All right.
Are all amenities based on the stock market?
No. The good news is we have a fixed indexed annuity, and it is not tied to the stock market. Your variable annuities are tied to the stock market. So you want to be careful on which one you put money in. Most people want to go to an annuity because they don't want the risk of the stock market, especially right now. If you're over 60, you don't have 10 years for that 401 or that IRA to build back up money. So the good way to protect that is with an annuity. Our fixed index annuity, and any fixed index annuity, you put in 50,000, 100,000, you're never going to go below that. Every year or every 2 years, your interest is just put on, and then the next year and the next year. So your value will never go below. You may not earn any interest based on the stock market, but you will never go below. And then when you annuitize with an annuity, that means you're ready to retire. And or just ready to have income come, you can choose to have 500, 1,000 for the rest of your life. Even if it drains your annuities have those riders on it so that you've got guaranteed income for life.
Okay, now I have a personal question. I don't know
Okay.
if you know anything about, since you were speaking on annuities. I'm with Nationwide.
Hmm.
That's where my money is. Now, I received a letter from Nationwide maybe 3 weeks ago. I had a fixed rate. I was receiving 3.5 interest on my
Hmm.
money, no matter how the stock market went. Now, the
Right.
letter I got about 3 weeks ago saying that now it's 2.5 in October. Now, shouldn't I already be grandfathered in since that's what I went in with? Or how that work?
Normal, right. Yes and no. Normally, how that works is you're only guaranteed that for a year. We had an annuity that a company that we worked with, and it was great because we were getting 3.5. Well, that was great when you moved that money in there first, but then the second year it went down to 2%. So it's generally you're getting a letter either every year or every other year telling you what the interest rate is going to be. The good news with our annuity, our fixed index annuity with Emeritus, the lowest it has averaged over the last 10 years is 4.45. The most it has earned is 8.06. So it's a great annuity for that. And then when you annuitize, you're guaranteed not to go below 3%. So never hurts to look at that. We've got a great in-house company reps that help us look at what you have and show you what Emeritus, or I call it Emeritus, but some call it Emeritus, has to offer. And this fixed index annuity is a great product because it's offering a higher interest rate. We've got a lot of people that move a CD over because those aren't offering nothing, or a money market account. But we have moved over many VALIC accounts, many other companies because they're getting 2 and 3%.
Okay, well, I appreciate all the information you've given me, and I need
You're
to take
very
that into
welcome.
consideration, and especially about the funeral insurance. I think I might have to purchase a policy there, since you're saying it's, regardless, that is for the lifetime of the whoever is getting the policy. Everybody come up with that gimmick. Your car guarantee, we guarantee lifetime. So okay, I appreciate
Very
you.
good. Well, I am glad you came to visit with me today. And anything else I can answer for you, feel free to chat. And
What is MASA?
MASA is our ground, air, and ambulance plan. So that takes care of your out-of-pocket expense if you go by ground or air ambulance. Most people think that our medical insurance does everything, and it does a great job, but everything now is out of network for the most part. Our ambulances are not owned by the local hospital or the county anymore, and they don't want to be in network. So most of us know on our medical insurance what their in network cost is, right? Because I see a doctor in network. I know my hospital is in network. I know my pharmacy is in network. But nobody really looks or realizes that the ambulance company is out of network. They don't find that out until they go by ambulance and they get a bill. So MASA pays 100% after your insurance pays. They pay every dollar, no deductible, no co-insurance, and no network.
You say after your insurance pay?
Correct.
So who they get the money to?
Yep, they pay. So what happens when you file a claim on MASA? When you get that invoice, you text me a copy of it and I send it to MASA, and they find out if your medical insurance has paid their part. They will pay the difference.
Oh, okay.
Yeah.
Okay.
If, you have enough, just like when you get to the hospital, if you say, oh, yeah, I have MASA, they ask you who your health insurance is with, you give them your card. If you think hey, I've got my MASA card here, they'll bill MASA directly. A lot of the places are familiar with MASA. But if they don't, which is what happens to most of us, we get that bill in the mail. You just contact me, snapshot a picture of it with your phone, text it to me, and I send it to MASA, and they pay based on the invoice. They don't care if insurance paid zero or paid half of it or 75%. They'll pay the rest, and they'll send that check directly to the ambulance company.
Okay. Okay.
Very good. Well, thank you so much for your questions.
That's it. What is the one more question?
Yep.
What is the accident clause?
Oh, an accident plan is usually an insurance policy that most of us get when we're working or when we're younger. You'll see it offered. Sometimes it'll be offered as a rider to your life insurance plan if you die by accident. Then an accident plan is, if you're working, someone like me, if I'm not working, I don't get paid. So an accident plan helps pay your money directly to you. The best way to explain it is we're all familiar with the Aflac commercials.
Yes.
They're very popular. So an accident plan is just that. It pays based on your accident, how many times you went to the doctor, if you went to the emergency room, if you stayed overnight, if you went by ambulance. It's an indemnity plan that pays directly to you. So that means what you do with that money is up to you. Now, first thing we'll use it for, obviously, or help pay our co-pays to go into the doctors or things like that. But if it's extra money, you can use it for whatever you need to pay for groceries or anything that you need. So an accident plan is a very good thing to have. It also helps for those things like an accident. Car accident, for instance, it may take you a year to 2 years to settle with that insurance company. Most of us, I hope, are driving around with more than the minimum state required limits, but because of things that are happening behind the scenes, we may not get that money first. But what is going to happen, if you're going to a chiropractor and your medical insurance doesn't cover it, you're having to pay those things up front. So an accident plan is going to pay either $50, $100, $300 every time you go to the doctor, every time you have an x-ray, depending if you had stitches. So that money can add up to be a nice amount of money to kind of supplement what's happened in the event of an accident. Had a friend that fell and broke her front tooth, and we know implants are very expensive. So that money from that accident plan allowed her extra money to pay for that implant.
Oh, okay. Well, I think that's going to be all of my questions for today. Thanks for inviting me on your show.
You're very welcome. And we're going to take a quick commercial break, and we'll come back and answer some more fun questions about insurance, because insurance doesn't matter until it does. Thanks, Bartee.
Thank you.
Millions of Americans are rushed to the hospital every year. 400,000 of them transported by emergency helicopter. Many times it's a life or death flight where every second counts. But the service often comes with a sky-high price tag. Tonight, ABC's chief investigative correspondent, Brian Ross, examines the big business of air ambulances.
You're talking about very critically injured patients, traumas, strokes, heart attacks.
Emergency workers call it the golden hour, the crucial 60 minutes to get medical care for a patient facing death.
Failure to get them to the care probably means that they aren't going to survive.
That urgent need to beat the golden hour clock has spawned a nationwide fleet of helicopter ambulances, saving countless lives. But our Nightline investigation conducted with ABC stations across the country, also found it has left many of the very people it saved facing financial turmoil, with bills as high as $40,000 or $50,000 for a short flight.
Would you call this price gouging?
Well, some of it is. There's no question that some of it is.
Warren Larson of Owensboro, Kentucky, a helicopter pilot himself, says he was stunned at the cost of the quick flight for his daughter after she was injured in a serious off-road ATV accident. $47,000 for 79 miles. After insurance and a failed negotiation, he still owes $36,000.
It's definitely going to cripple us financially.
He is not alone. With our ABC teams across the country, we found hundreds of families.
I'm worried to death about it. It's very stressful worrying about it.
Being sued.
I don't have the money to give them, so my wife and my son and myself don't want to be homeless.
Or hounded by debt collectors.
I see the number, I'm like, I know who it is, I don't even want to talk to them.
Over huge bills their insurance won't fully cover.
I feel like I can never dig out.
Some forced into bankruptcy. One after another, patients told us how they felt they had been taken for a ride in more ways than one.
I wasn't asked if I wanted to go on the helicopter. I didn't think I was hurt that bad.
91-year-old Warren Lowe and his wife Ethel were on their way to church in Virginia when an uninsured driver slammed into their minivan.
911, where's your emergency?
Car wreck here on 89. Several people hurt.
Lowe's leg was shattered, and doctors at his local hospital wanted him sent to a trauma center 55 miles away.
Didn't nobody tell me nothing. They just took me and put me in the helicopter and gone.
The cost, $47,000 for a 20-minute helicopter ride.
I couldn't believe it when I looked at it. $47,000, that's ridiculous.
Jean Medina got a $35,000 bill after her teenage daughter, Sophia, on a family vacation, developed complications from a tonsillectomy.
The surgery itself was a total of $16,000, and the helicopters nearly $35,000. It just seems a crazy amount of money.
After insurance and a protracted back and forth, she still owes $17,000. And Medina questions whether her daughter's 37-mile medevac trip was even necessary. It took almost an hour for the helicopter to just arrive and load, and she was able to drive the distance in almost the same amount of time.
I left a few minutes before they took off and ended up arriving at the hospital about 5 minutes after they did.
The decision to call in a helicopter ambulance is made by attending doctors. But the families, like the Larsons of Kentucky, are the ones on the hook for the cost. Warren Larson says he was being treated himself, given morphine, when he signed this consent form for his daughter's medevac trip, which in small print made him personally and fully responsible for the bill.
They said, don't worry about it, it's just a standard form, just to give us permission to transport your daughter.
Nowhere on the standard form does it inform the patient or guardian of the expected cost. State insurance regulators say they have been unable to rein in the prices or tactics of other helicopter ambulance services because of a loophole in the federal law. Al Redmer is the insurance commissioner in Maryland.
When the federal government deregulated the airlines industry, these commercial helicopter companies were part of that.
As if they're a major air carrier.
That's exactly right.
So you can't regulate them because of the FAA rules.
That's exactly right.
They can get away with these charges. They can charge, as you say, whatever they want.
They can. They can.
For Nightline, this is Brian Ross, ABC News, New York.
Hey, welcome back. That was a video on our MASA plan. And for as little, most people ask, okay, that's all good, but how much does a MASA plan cover? And why should I buy a MASA? If you live in Florida, the only state that is 24/17 single, $32.50 a month to cover your spouse. All the other states is $27 a month and $35 a month to cover your spouse. It's a great plan because MASA doesn't own an ambulance. MASA doesn't own a helicopter. We pay regardless of what ambulance picks you up, regardless of which helicopter picks you up. So keep in mind now, with the helicopter transportation being so much more out there now, you are getting membership offers to join them. And that's great. We want to support our local helicopter companies because we love them all. And they provide every life-saving equipment on those helicopters. They're who they call to get you from a non-trauma center to a trauma center. So we want the best on those helicopters. But you would have to buy a membership for all of those. So with MASA, they cover any ground, any air, anywhere in the world. That includes if you leave the United States. The only thing you have to do if you leave the United States is let them know. We have a lot of people who go on mission trips and things like that. So don't hesitate to call me. Our MASA plan through AMBA, they waive the $60 application fee, and you get a 40% discount through AMBA. So make sure you come through me to get your MASA plan. And looks like we have a question about life insurance. My husband says we don't need life insurance, and I think we do. What should I do? I think it's a very important thing to talk together about why he doesn't feel like you need a life insurance policy. And a lot of times that question will be, well, because I have money set aside in savings to pay for that life insurance plan. And when someone tells me that, I say, that's great. But the thing I want to caution you on is as we get older, after age 65, 70% of us will need some form of long-term care. So then what happens to our savings? If we're paying $3,000 or more a month for home care, $6,000 to $7,000 a month for nursing home care, that savings is going to get drained fairly quickly in a year or 2 years. So take that money and do one of two things for it. If you really feel like you've got that $10,000, $20,000 you want to designate for your funeral, then go talk to your local funeral home. There are several options you can do, from pre-purchasing your funeral to paying for it at today's cost, so that in 10 years, 20 years, 30 years, you've already paid for that. Everything from buying your plot, from buying your headstone, and getting your everything else arranged. Then some people will say, well, I want to be cremated. So that doesn't cost as much. And you're probably right. Cremation doesn't cost as much either. But you want to make sure your family and everyone around you know what you want. Because kind of what happens at the end, especially for things that are so unexpected, we end up doing what we feel comfortable with and not maybe what our loved one may have wanted. And the cost of cremation is going up. You'll see a lot of people that won't have any service, or they'll have a memorial service weeks later. Well, that's all fine and good, but it does still cost some money if you're not using your local church. Also, too, there are funerals that even if you choose cremation, you can choose a viewing also before cremation. So all those adds up to money. So check a life insurance policy, especially when you lock it in at a younger age, locks in that rate. After about age 50, you should really look into a whole life policy or universal, what we call those permanent insurance products, those that the premium doesn't change. Term insurance is great. Term insurance has their place in your portfolio, especially in your 20s or 30s, because you're buying a home, you're raising a family. And if you're married, you want to have money set aside to cover your bills, especially if you're married and both your names are on the mortgage. If something happens to you, then the other party is responsible for the mortgage. So a term life insurance policy allows money to come into play to pay off that mortgage. Another question, Medicare supplement. How do I know if I need it? Well, if you have Medicare, you're 65 or older, You may or may not need a supplement. I think most of us do. Medicare pays 80% of our medical expenses for the most part. They pay 80% of a doctor visit, 80% of a hospital, and you're responsible for that other 20%. Now, used to 20 years ago, 30 years ago, a doctor's appointment probably cost $100. Well, 80% of that, 20%, $20 is not a big deal. But if you've ever looked at your explanation of benefit, you know that a doctor visit is probably triple or quadruple that amount. So a Medicare supplement will pay that other 20%. An Advantage plan will help pick up your prescriptions. You'll have co-pays and deductibles. If you have Medicare Part A and B, you will need a Part D to cover your medicine. So talk to an insurance agent and talk to someone that offers both, so they can explain the difference between an Advantage plan and a supplement, because sometimes a supplement makes sense and sometimes an Advantage plan makes sense. But talk to someone who can talk to you about both of those needs. So we're going to take a quick commercial break and we'll be right back.
Blessings, blessings, blessings. This is Dr. April Johnston, and I invite you to come bring your flowers and spend a little time, a few minutes with Dr. AJ. And I'm Dr. AJ, Thursdays, 6 p.m. Eastern Standard Time. Looking forward to the financial empowerment, wealth, and wellness. What can we do together to bring a better community while we're prospering in the ways in the land? Come join with me. You're invited. I can't wait to see you. Please follow all the inscriptions at the bottom at drapriljohnstonOutlook.com. We look forward to spending a few minutes with me. I need you. You need me to prosper. Thank you.
When someone needs an ambulance, the last thing most people think about is, will my insurance pay? That's what happened to Dave Ross when his son went to the doctor in excruciating pain and was sent by ambulance to a hospital in Framingham, Massachusetts.
I was going to owe, the balance of $2,400, whatever the insurance company wasn't going to pay.
And how far was the ride?
It was 1.7 miles.
Services are contracted out, meaning when you dial 911, it could be a private, for-profit company that responds.
It's a growth field. People in the for-profit world looking for good investment see ambulance services as a really lucrative area to get into.
American Medical Response, the provider in Framingham, is the nation's largest private ambulance company and says the company is in network with multiple insurance companies in numerous communities. NBC News
putting everything at risk financially just to get the emergency medical care that we need.
To reduce such bills, advocates say negotiate with your insurer, notify state regulators, and appeal to the ambulance services. Ross did, and AMR cut his bill to $1,600, an amount he still found too high.
It absolutely doesn't seem fair, but I felt like I really didn't have a leg to stand on.
Lester, what's happening here is really a trend that started during the
when it seemed like the world had stopped, as if our normal would never be again. Confinement Chronicles.
Still, there were those who held fast to hope. These are their stories. From teachers to dads to nurses on the front line, they have chronicled their messages of hope. Confinement Chronicles, now available. Order today on Amazon, also available in audiobook or at laderopress.com. Confinement.com.
Confinement Chronicles.
Hi everyone, Cam here from Management Consultative Favor. You know, Mac Favor. Just reaching out to remind you of some of the awesome services that we do provide once more to community-based providers throughout the country. And so these are your licensed clinical social workers, your psychologists, your behavioral analysts, case management organizations, nonprofits, and so forth. We help them with creating community-based programs. And so these can be anything from helping them design and implement a program. It can be with helping them get credentialed on insurance panels. It can be with making certain that they're compliant with different regulatory statutes. This is what our project management firm does, and we do it gladly with a servant's heart. Why? Because we got the favor of the Lord on our side.
If you've already put an Aflac Cancer Plan, American Fidelity, one of those plans in place, that's awesome. I'll show you what that coverage covers, and we may recommend adding something to it. The one thing you got to be careful about, hospital indemnity. We bought a lot of hospital and ICU policies, but did you know they cut off half the benefit when you turn 70? So that just gives us lots more topics to talk about next Saturday at 8 a.m. Thanks for watching, and I will see you next week. Bye. Hi, everyone. This is Insurance Chat with Debbie Scarborough. I'm from Tifton, Georgia, and I'm married for 35 years. We have 2 boys and 1 grandson, 4 cats, 3 dogs, and a turtle. Text me your questions. That might help for our next episode. Want to make sure all of your questions get answered. Help bridge that gap between insurance language and what we need to know today. When we're dealing with our home and auto policy, we hear the word deductible. When we're talking about long-term care, it says elimination period. Well, they both mean the same thing. That's what you pay first before the insurance company pays. So there's a variety of products, especially with medical insurance. Most of us are seeing our deductibles $3,000, $4,000, $5,000. So today is probably more than ever that time when we need to think about a supplemental policy. So make sure you text me some questions that you may have about some of your insurance. So thanks for watching, and I'll see you next week. This was Insurance Chat with Debbie Scarborough, and I hope you have a great week. Thank you.
Hello, my name is LaVonda Williams, and I just want to introduce myself a little bit and talk a little bit about my alopecia experience and how I'm living with it daily. It started around about 15 years old. I wasn't sure of what it was, neither was my mom. But we just thought it was just a thing that I was going through, puberty, basically. Hair grew back. I had no problem with my hair at that time, losing it anymore. But as I got older, by the age of 20, 21 is when it started coming out a little more than usual. I eventually went to the doctor, dermatologist, to find out what it was and was diagnosed with alopecia areata at the age of 22. After that, it started coming out a little bit more than usual. Then I started wearing wigs. I wore wigs for about 20 plus years. Every color, every style, styling and profiling. And I was always self-conscious about it. Always thought that my hair was going to come off or somebody was going to see me without a wig or whatever. Then I just finally got to the point in my life where it didn't matter what people thought about me. It was only what I thought about me. I had to take a long look in the mirror at me and learn me. So on March 16th, 2018, I cut everything off, and I have been living the bold and beautiful since 2018, and I love it. The downside about it, sometimes I get a little flack about it. Why don't I have hair? Why are you bald? Or anything like that. I used to be really, really upset about it. It does not bother me at all because I am fabulous. I am beautiful no matter what. It got me the opportunity to participate in 2021 Miss Senior Diva Jacksonville, Florida pageant, and I won. I am so happy about that. I got to travel throughout Florida to speak on alopecia and talk to women that are suffering in silence. And I'm living a life and I'm loving me. I don't have a problem with anybody. If they ask a question, I'll tell them my story. The more they ask, the more I offer. So I'm just trying to get out here and continue my platform, teaching women, showing women, encouraging women, and empowering women that alopecia